Sanjeev Sanyal, global strategist at Deutsche Bank, who joins us from Singapore. Sanjeev, good morning and thank you for joining us. You have stated that there is no reason to panic due to tapering. Do you think market would not react to event flow? Markets are not excited about the kind of economic growth US economy has reported?
I think not much will happen from the market response perspective if and when the tapering comes. It's now very well expected. Most market participants would have already factored that in. In any case, with growth beginning to slowly gather momentum, it is the responsible thing to do. People must remember that this is not a switching off of the tap. It is, as the term suggests, a tapering, and it is, the way the Fed should behave under the circumstance.
So what kind of year would 2014 be then for emerging markets?
I think, as I said, it'll be some acceleration of growth, but let me point out that it is really the US driving a lot of this global demand acceleration. So I think the key to remember in all this is that the US, yet again, will play a very important role in driving world growth, which is why we have been talking about an economic system dubbed as Bretton Woods 3, where a US deficit will again be a linchpin of the global economic system.
So what is your expectation from India in the new year? With all the pressure due to election, do you think 2014 could be a year of, could be a make or break year for India?
I think from an economic perspective, growth has slowed down so far. It may pick up a little bit next year. But really, for India to reach its potential, what we need is sustained supply-side reforms. They have to be sequenced properly. They have to be sustained over many years. So it's not, I think we need to stop in terms of make and break years. Having said that, clearly sustaining supply-side reforms over years requires political will and political support. And clearly, 2014 is a very important election. So in that sense, yes, 2014 will be very important, but one shouldn't confuse that with the need for sustaining supply-side reforms over long periods of time.
There is expectation, Sanjeev, that perhaps one more rate hike as inflation is going to moderate is in store for us. Is that your view as well?
I think by and large, the monetary policy will be held steady. Growth is moderating in India, and you've already seen rates being increased. So it's not that India doesn't already have reasonably tight monetary policy. I think the authorities will hold things steady by and large. And I think if necessary, if inflation doesn't moderate, some more tightening. But by and large, I think for the next 6 months at least, the Reserve Bank will hold things as they are.
Sanjeev, what is your view on currency? There is opinion building up that with the narrowing CAD, the rupee could go back to 55. Is that a stretch, or that is still a possibility?
I think we haven't yet seen that big narrowing being sustained. So I think I'll hold my judgment on that. It is possible that the rupee may come under some pressure to appreciate. But let me point out in this context, we do not expect the rupee to go back to 55. The rupee is perhaps much closer to fair value than that. And should there be, for whatever reason, pressure for the rupee to go back to much stronger levels, I think the Reserve Bank should accumulate reserves instead. At least that's what I would do if I was Raghuram Rajan. I would accumulate reserves rather than let the rupee strengthen a long way from here. A little bit of strengthening is fine.
So Sanjeev, what's the sense? I mean, the recent current account deficit numbers were rejoiced by the market. What is your reading on the macro variables in India right now? Are you feeling more confident about the India story?
I think the key thing to recognize in all this is that India has now for quite some time seen growth slow down. The fact that you've had persistent inflation and a large current account deficit, despite this, suggests that there is a supply side issue. Yes, the current account in the very latest number has shown some reduction, but I wouldn't read too much into it yet. The fact that you're having these signals, which usually signal an overheating economy, in a situation where your growth is slowing, suggests that the supply side of the Indian economy is really the constraint. It is not a demand problem, and that is why I keep hammering away at the fact that India needs supply side reforms. No amount of demand management is going to solve India's problems.
Right. So Sanjeev, finally, where will money find its way in 2014? US markets or emerging markets where the rate of change in coming quarters could be constructive?
I think 2014 will see overall growth across the board accelerate. However, as I mentioned earlier, a very important part of that will be an acceleration in demand out of the US. So the US remains a linchpin to this, and consequently investment opportunities in the US remain very attractive. But of course, in selected emerging markets, as growth picks up, value will be available.